23. We got to talk. You guys watch the show. If you watch the show regularly, I don't talk about the boring stuff, right? You guys know this. I don't talk about the things that everybody's talking about, but today it's hard not to. And it ties into my disposition on the new year to some degree. We got to talk about what's going on with Tesla. We got to talk about what's going on with Apple. 10-year yield is having one of its biggest first of the year moves that we've seen in quite some time. So that's probably good for discussion. And then, the dollar is making oil move. We got to talk a little bit about that. In the meantime, my name is Jamal Chandler, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade, folks. Hope you guys had a great, happy holidays. I went dark, man. I don't mean bad dark. I mean like dark. I just chilled out. I didn't do a thing for the past week. I was off air, as many of you noticed. Or maybe you didn't notice. I don't know. But I was off the air. Yeah, it wasn't on. I was just kind of chilling out at home with the fam on the couch, having a lot of Christmas drinks, shall we say, and just chilling out, and just kind of enjoying a little bit of time with the family. At a good point in time, I mean, me and the wife are in a great place and just kind of hanging out with our kids. And we got a kid in college, as many of you know, and he was at home. And I don't know if he was at home because I barely see him. Nah, it's what it is, right? I did the same thing when I was in college. You come home, you hang out with your friends, you're always gone. You come and get some rest. You do what you do. Got a kid on the way to college. Matter of fact, so far she's gotten into Marquette, DePaul, and Butler. And so we got to do a couple of trips. And check some of these places out. You know what I mean? I got to make sure my girl is good. Anybody mess with my girl in college, they don't have a problem. And my 10-year-old, just hung out with him a lot. Actually, we went to a video game place here in the suburbs. It's a big, huge place with video games, kind of like the old stuff. It's interesting to see that little kids still like that, despite the fact that there's video games to do now, like, the Roblox of the world and Minecraft. It's still entertaining for a kid to go to a place with a ton of video games and just run around like they're, a chicken with their head cut off. I mean, it's really interesting. So he and I are going to be spending a lot of time together really soon. I signed him up for 2 basketball leagues, not because I love basketball so much or he does. They do, this happens in a lot of towns actually here in the Chicagoland area. You're kind of, you share a high school. And so as a result, we signed them up for basketball in our town and the next town over, which is actually where the town where we used to live as well. So you can meet a lot of kids. So it's going to be cool. So I'm actually helping coach them on both teams. And so basically I'm going to have 2 teams that I'll be talking about from time to time. It's always funny to coach little kids at that age. You know what I mean? They're figuring stuff out. And it's so funny because at each one of these things, the people that are running the league are like, it's an instructional league and you want the kids to learn. Like, they're just telling the parents and shit because they know their parents are going to lose their mind and try to just win every single game. You know what I mean? We're not going to do that. I already know the key to success. I've done this before. Basically, you can't guarantee you're going to win a lot of games. So what you can do is guarantee the kids are having fun and that they learn. And I promise you, if you do those 2 things, kind of can lead to wins or overall wins, right? Like they leave with a good experience. That's what you want. So that's what's going on with me. Like I said, hadn't done a whole lot over the last couple of days. I see, there's been a lot happening in markets to some degree. It was kind of quiet at the end of the year. It usually can be. I mean, why is it not? Especially to the end, like a year like we just had. I mean, it's going to be a little, it's going to carry over, I think, a little bit, like that's kind of the deal and kind of the title of what we're talking about today to some degree. How can you leave last year behind? Most times it's easy to do. I was talking with Chris Vecchio today on Futures Power Hour, and this idea of, is there a psychological change that happens in your mind when you roll to the next year? Most times I feel like it kind of is. Like you come into the next year, everybody starts talking about the January effect in stocks, which I feel like we could probably do some research on. I'm sure we have done some research on in the past. I mean, it's kind of bullshit. It is what it is. But there is sometimes usually a psychological change, right? You're like, it's New Year, I'm changing out. Sort of like the idea of a New Year's resolution, which, by the way, I shouldn't have to say this at this point. You people know it. If you're watching this show on the Tasty Live webpage, you can also come to the Tasty Live YouTube page. Should be right there. I'm the only show running right now. It's a poll up talking about New Year's resolutions. And I want to know what you guys think. Do you want to exercise more? Do you want to save money? Do you want to do something else? You can type that in the chat. Or maybe you're like me and you hate resolutions. So let me know what you guys are thinking. But sometimes you come into a new year with the stock market and it's completely different and you can leave the old year behind. We can't quite leave the old year behind because a lot of what happened in the old year was based off of interest rates. And that's still going to be a theme, I think, at least for the first few months of the year. So until that changes, which don't get ahead of yourself, doesn't mean it's going to. Every time you start talking pivot again or cutting rates, I would like to say we're a long way from that just because I want to think about I want to continue to be in a mindset of it's going to be a tough market. So I'm not assuming that a pivot's coming because then I'll start positioning myself as such. I'll start trying to get long, thinking a pivot's coming, and that's how you get set up in the bear market rally. So I think you just got to trade the market that's in front of you, man. You know what I mean? Speaking of, let's pull up some slides. Let's talk a little bit. Let me holler at the people in the chat. People, what's going on? Grumpy Mike, good to see you, man. Happy New Year, bro. George B, Happy New Year. What's up? What's up? Where are my other people at? Where's my guy, Evan? Evan's always here, man. I'm waiting on you, buddy. Let me know. So Tesla missed fourth quarter deliveries, as you probably know, right? Like that's the headline. But that's not the whole story, right? It's their third time in a row missing deliveries. And if you're paying attention, this is really more of a demand issue, right? I mean, this is obviously a demand issue. I mean, they have the production, they have the facilities to make a ton of cars. But we know something's going on in the car market. They have a lot more competition these days. Everybody's trying to go electric. They're still the leader, right? Like they're still the leader in the field, but everybody's trying to go electric. A lot of people want to blame this on what's going on with Elon and Tesla. I mean, with Elon and Twitter. I don't think so. It's a demand issue, right? Like you're having a situation where people aren't as interested. I just saw something today, for example. I got to find the statistic for you. I mean, and if you follow me on Twitter, you already saw that I tweeted this out. Luxury brands with the highest new luxury brands with the highest levels of new inventory right now. Infiniti, Jaguar, Volvo, Audi, and Tesla. There it is, right? Like there it is. Those are the ones that have the highest level of inventory. And so I just think the demand is fairly low. I don't think it's an issue of what's going on with Elon and the other stuff. I mean, that's smokescreen, man. Like right now, it's really more of that, and obviously some of it is economic headwinds, what we've seen with interest rates in the markets. And so, you know, I'll be honest with you, as much as I want to be a contrarian, this is a little hard to get in front of right now. Selling vol is one thing that you should be looking to do at times, and maybe we can look at some opportunities there. I mean, you know, that getting more neutral, but the idea of getting long Tesla because you think it's cheap right now, I don't know about that. I think it's a little hard to do. If you have your strategy is to systematically buy stock when the stock comes down, I mean, that's kind of a strategy that I have with, like, let's say Bitcoin, for example. When I see the price drop a certain level, then I look to get long it because it's a long-term hold. This is a perfect opportunity for you to do that. But getting long Tesla for a short-term trade, for those of you who like to buy calls or buy call spreads, first of all, you're going against the grain because that's really hard to do right now. And just selling outright puts, you might want to be a little bit careful about that right now. I mean, this is pretty decent sized. Let me look it up. This is pretty decent sized volume that we're seeing, I think. 194 million shares. I actually don't remember. Oh yeah, I mean this is fairly elevated volume. When you look at over the last several trading days since the 21st, it's been pretty big trading volume. This thing could get fairly ugly to the downside. I bet you I could find a whole bunch of trades that Macro's doing where they're getting long puts. I remember seeing that a while ago. That's not anything that we're interested in here. I think you don't want to get long puts here at all. First of all, vol is too high. Second of all, the only way you want to get long puts is if you're overbuying a little bit of stock and maybe long some puts on the downside. Like that's one way to kind of trade it if you're a long put person. But you need to understand that buying these long puts right now, IV rank is 69, dude. It's elevated, right? So those puts will get crushed if the stock has any semblance of a strong move to the upside. So just keep that in mind. JD, what's up, man? Love the show. Appreciate it, bro. I thank you, man. I try to do what I do. We have fun here. Apple is kind of a similar deal, right? Apple's their stock is down because they asked suppliers for fewer AirPod and watch components. Look, I have been waiting on this to happen for a long time. I'm not an Apple person. If I buy another phone anytime soon, it'll probably be that. But my point is, like, I'm not one of these people who's always gone crazy over all of their products. And then if you really paid attention over the last couple of years, they just kind of been recycling stuff. It's not like a whole, big new thing. Anytime you buy an AirPod or you buy a watch or all of that, man, they're not really coming out with creative stuff. We've been saying that for a long time. They really haven't come out with any super creative things since Jobs passed. God bless the dead. So is it a surprise that in this environment where you're having economic headwinds once again, that people aren't buying as many of these components? I don't know. Very isolated event. I went to an Apple store on the 23rd. No, was it the 21st? It was the 21st. 21st of, I shouldn't say this because this is an outdoor mall kind of, like not far from me. It was the 21st of December. And it was not as crowded as I would have thought. But again, it's one isolated incident. It doesn't certainly account for every single Apple store, especially ones in major metropolitan areas. Not that this one wasn't, but you know what I'm getting at. I just think this makes sense to me. I think it makes sense to me. And I think at some point, they're going to find other ways to roll people in. Now, again, you'd have to look at the breakdown. I'd have to look at, some type of, I got to remind myself of where they pull a lot of their money from, right? And before you get too down on this, these are the times where these are big names, right? Like, let's be honest. These are big names, and these are names that a lot of people are invested in. And some of you are too. We all trade options here, and we sell volatility, which again, looking at Apple, 92 IVR. It's a good time to sell vol in here, right? But I mentioned these two names up from the outset because it's interesting. Not only is this a good opportunity to sell vol in these names, it's also a good opportunity to look at sort of, for those who are long-term investors, of buying some stock here. And in doing that, one of the things you need to look at is this is the time where you dig in deep, right? This is the time where you go into the fundamentals part of our platform and look at some information. But even if you're not into that, just search around for information about how much of Apple's revenue comes from AirPod and watch components, and how much comes from the App Store, which again, I think they make a ton off the App Store. They make like 30% off of anything that anybody does. Things like that. This is where you start looking into the revenue stream and what where they really draw their money from. I think that's what you need to do if you're looking at sort of long term and how much these stories mean. But I think these are meaningful. These are meaningful. It's obviously taking a hit, and it's a little bit nerve-wracking right now. And a lot of it is the environment, right? So the other thing you got to wonder is at what point it gets to the idea of interest rates. How much is this going to affect their interest rates, and how much is interest rates still affecting these companies, and at what point are we going to see those pivots? At what point are we going to see interest rate cuts? As of right now, this is where you pull up the CME Fed Watch tool. And again, we're expecting there's a 71% chance of a 25 basis point rate hike in February and March. There's a 62% chance of another 25 basis point rate hike. And I think, if I'm correct, in May, they're not really expecting one as of right now. But again, we got, these things are going to change. It's some months out. And as far as rate cuts, I don't know when that's coming. Have you guys noticed, by the way, starting to see ads for CD rates and 3+% for putting money in a CD, certificate of deposit at a bank, for those who don't know, things like that. You're starting to see ways where you can sort of be a saver, right, with cash. That's another form of what we do here, right? We trade options, we trade volatility, we buy stocks. But when you have cash, sometimes it makes sense to sort of have cash in those accounts too. Aside from what's going on in your trading account, I'm sure you have other cash as well. These are the things you got to look at. You know what I mean? Speaking of a stronger dollar, is causing crude to take an L today. Crude is, crude has been, God, it's been such a weird trade over the past year. Down $3 and change right now, and it's been one of those things where I feel like right now fair in crude is about $80. Maybe I'm wrong, but if you look at the chart and you eyeball it, you can kind of see that's where it is. And I think to the high side is 90, right? In the near term, whenever that may happen. And who knows why we get there. Maybe it drifts up. Maybe dollar continues to fall more. I mean, this is unusual that, it's not unusual. It makes sense that dollar's up today, markets are down, but it's unusual to see a big move in the dollar considering that, for the most part, dollar's been weak over the last couple of months here. So I think that's all this is. I don't know what the prospects for crude are this year, right? Like, what does demand look like? I feel as though gas prices got fairly cheap over the last couple of weeks, I'm sure you guys noticed. And I think it's fair value right now, I mean, how do I know? I don't know. Just look at it. It's kind of an equilibrium. Anything cheaper than gas right now would be oil trading, I don't know, below 70. And anything more expensive would be oil trading 90 to 95. It's just kind of what it is. We're in a fair value range, in my opinion. So I'm not really interested in trading any oil right now. 10 years set for its biggest first day of the year drop since 2001, down 1.84%. And that's the whole back of the curve. Actually, all yields are down right now. We'll look at the platform in a little bit, but the back of the curve is down. The back of the yield curve is down today. 10 years down 1.84%, 30 years down 2.3%, 2.43% that is. I tell you, this is going to be a story, I think, at least for the first part of the year. What's going to happen with rates? And we're going to, if we get what we get what we're saying right now, which the charts are showing us right now, where we get just a 25 basis point and then another 25 basis point, and then we sit. I think that's. Well, I mean, I'm no Nostradamus, but I think that's a chance for the markets to sort of start to trend up, right? If for some reason we get some data that says inflation is still high, I think I wonder how long the inflation reports are still going to be a big deal. You know what I mean? Like we still have to watch for those, the CPI reports. I still think those have been some of the more volatile things over the last 3 to 6 months. At some point, they're going to calm down. A year from now, you're going to be like, remember those times the CPI reports used to move the market? It'll be like that, right? I'm telling you. We'll see. Oh, speaking of Tesla, Elon Musk's net worth is obviously taking a hit right now. Let's move to the next slide. It's good to be back, man, hanging out with you guys. Bonjour, Jamal. Bonjour, Titan Canada. Bonjour. Yeah. Je parle un peu de français, un peu. H. Montero, why is everyone asking for a pivot? Because they want the market to rise, right? Everyone's asking for a pivot because obviously when we've been raising rates, that's what's been pushing the market down, pushing asset prices down in crypto and stocks. And so everybody wants a pivot because they just want the market to turn around. But what they're not saying is that we can't pivot until we've done away with inflation, right? The number one thing the Fed said going back to November of 2021 is they were going to attack inflation. And you got to believe them on that. They haven't wavered, it is what it is. So this is your boy's net worth. Yeah. Number one is SpaceX. He's got, this is a pretty good portfolio when you look at it. I mean, in a way, it's not bad. I mean, it sucks right now. It's taking a hit. But to have SpaceX as your number one, and that's the thing that's going to be your growth thing, it's kind of interesting, right? Do you think most people should set up something like this? Let me break it down for you, okay? Like, SpaceX is the growth thing. That's the thing you're really pinning a lot of your hopes on. And also the way you're going to get away from all of this shit. You're going to hop on a SpaceX plane. You're just going to get away with another planet, and you're not going to have to deal with any of this. But SpaceX is the number one thing. Tesla is his main baby, but it seems like, it is his main baby, right? Like, that's where... really, Tesla is the number one thing when you look at, obviously, Tesla options and stocks combined, right? Like, that's clearly the situation. Over 50%, a little bit over. But SpaceX is your next growth thing. Tesla's the thing that's kind of making you money. Twitter is just like, let me have a little fun, and I'm going to buy this, right? And fix it up and show people what I can do. And then you got the Boring Company, which I'm still upset that I missed out on the flamethrower. Like, I should have bought one, man. I should have bought one. I'm still upset about it. They went so fast. Can you please do that again, Elon? Can you please bring back the flamethrowers? I will buy one this time, I promise. I'll buy 2 of them. I want one. I just want to mess around with it. Where am I going to use it? I don't even know. I got space in the backyard, but that sounds dangerous. I probably shouldn't do that. Yeah, overall, obviously, Twitter's private and that valuation is what it is. He's going to try and grow that, right? Like at some point, he might be able to sell that back out and take it public. And who knows? When he does it, it could be worth $50 billion. Like, who knows, right? So that's kind of interesting. Whatever he turns the Boring Company into, who knows? But I'm sure it'll be worth more than $3 billion. I'm sure it could be more interesting. Or it also is just funny that he has $3 billion just to screw around with and do nothing with. SpaceX obviously is going to get bigger. These pies are going to grow. It's going to be really interesting. And Tesla's the thing that he's kind of, this is maneuvering at times. It's kind of, imagine this is a growing, living, breathing thing, and it's moving, and things are like getting bigger and bigger or smaller or whatever over time. This will be interesting to watch. I think Tesla, for him, is going to get smaller over time, and SpaceX is going to grow, and Twitter is going to balloon. I think that's what's going to happen. Let's move ahead to the next slide. I'd love to have that problem, too, and have that much money. You're right, George. I would, too. I'd love it. It'd be dope. Every day would be so fun. These are the problems of Elon Musk and Tom Sosnoff. These are the things that they have. These are the things that they do. Tesla's day-to-day percent change. This is a big one, man. I mean, these are some big moves more recently. Obviously, when you look, you can pull up a lot of stocks and you won't see them getting this close to 10% moves in either direction. This has always been a volatile stock. Let's not kid ourselves. It's always been fairly volatile, even when it was whatever valuation it was. I don't know, 2, 3, 4 trillion. I don't even remember. I don't even pay that much attention to the valuations these days. Whatever it was, whatever it was beginning last year was a whole lot higher valuation than it is now. Look at that. It moved 10% then in both directions. So for you to think that it's not going to do that now was loony talk. It's still going to be volatile. It's going to be even more volatile now. Just keep that in mind. But yeah, basically 2 10% moves in the last 5 trading days. Really interesting. Let's move ahead to the next slide. So this COVID China thing is obviously still a story, and the fact that COVID is still a story 2 years after the fact, I mean, it lets you know this is another one of the reasons. Interest rates. I really think we're going to, it's going to be a different year. It's not going to be the same year as last year. I don't think that's possible. I haven't seen that yet in my 16 years of trading. Have not seen that. I haven't seen the same year back to back. There's always something different. If there was the same year back to back or pretty much frequently, well, me and all the lovely people you see at Tasty wouldn't be here. We wouldn't be able to talk about it, right? We're able to draw on a lot of experiences of things that we've seen and be able to sort of, we pride ourselves in being able to sort of, again, nobody knows anything, but we figured out a lot as far as like IVRs and ways to sell vol and trade vol, right? We have opinions, right? We have opinions about the market based on things we've seen in the past. That is unusual, but it's cool. It's cool to do that. That being the case, I remember seeing a lot of things happen with Chinese names before. I remember in 2007, there was a lot going on at the time, and Chinese stocks were getting absolutely hammered. And if I had the timeline right, was it 2000? No, it was beginning of 2007, I think. Anyway, they turned the corner. They completely changed, and they were some of the biggest movers in the market. It's been a real tough time. I've made, no bones about it on the show, talking about how hard it's been to trade Chinese stocks for the latter part of the year. A lot of it is, China's very different than the way that we do things, and obviously their market is a little bit different too. The way that they were handling COVID obviously was one that we were the same thing that we were employing right at the beginning of it, and even in the beginning of 2021, that was depressing the value of a lot of stocks. Then they just kind of, the people had enough. And the people basically attacked the government to some degree, which is really rare and unheard of. And as a result, people got out, got more infections. I guess they weren't really lying. A lot of people thought that they were suppressing these these COVID infections and keeping their economy down and keeping things under control by keeping people, with the zero COVID thing. But it would seem not. I mean, they've had a ton of infections. I don't know what their vaccine is like, and I think that's part of the issue. But nevertheless, you're wondering if, after this huge outbreak more recently, and they're letting things, sort of matriculate through, have the COVID infections peaked? I'm not sure. A lot of the names have been running today. Maybe you've seen them. Will this continue? I don't know. But they do continue to provide some interesting trading opportunities. I tell you, I had some diagonals on for a while there. Those worked out well. I think this was at, when was that? November? I took them off, moved on to the next. I'm eyeing them up again, but I don't really want to do it with the stocks up here. So that might be something I'm looking at again, because IVR is cheap in these names. Majority of them. I mean, Baidu, 18 IVR, Baba, 12 IVR. So I find that interesting, because a lot of I've seen times where these Chinese names have fairly high IVR. And right now, one of the things you can do, a lot of them have earnings in March. You can sort of look to buy March, sort of. I mean, I know vol is probably a little higher in March because it's earnings, but for Baba, for example, and we'll take a look at that real quick. I got to finish out the show. I don't want to miss out on the platform. Let's move ahead. But point being, have COVID infections peaked in China? I guess we'll have to wait and see and find out. Let's move ahead to the next slide. I got to tell you, this is a chart of, I should have sort of done that, but this is acquisitions from big tech names over the last several years. And obviously, it was fairly small this year because big tech names really didn't acquire much. They haven't had the cash. They've had to be frugal. So, yeah, it's been a really tough year for tech names, but keeping in mind, I mean, from big tech names, mega tech names, the Microsofts, the Apples, the Amazons of the world. I mean, only 22, right? Considering like 2014, 2015, 2016, they were even more recently last year. They were buying a whole lot more. So, yeah, I don't know when we see this metric pick up again, because they're going to be frugal for a while with interest rates being higher up here. Let's move to the last slide. Earnings, none. FOMC minutes on Wednesday. We'll see what they say. People are going to be looking again for the pivot idea. I don't know if it's happening. And then December non-farm payrolls on Friday. Number of S&P 500 stocks above the 50-day moving average. It's below 50%, as you would imagine. Still not good. Let's move to the platform really quick. Only got a minute or so left on the show. What I want to do real quick is look at the rest of the week. We got the non-farm payrolls coming up on Friday. I guess we're right here. $7 move. It's about 2%. Again, unemployment is like the most important thing to watch, because as they've raised interest rates, the idea is that it's put the crunch on companies, and companies might start laying off even more. We've talked about layoffs a lot on this show. It's not something we're looking forward to. It's just something in the past that you've seen during rising interest rate environments. It is what it is. But last thing I wanted to mention, I was just talking about this idea in Baba, right? This is something that I was looking at before and things that I did before. The idea of doing diagonals, right? If it works and it pans out, the ability to trade diagonals is, I don't know, it's something I'm interested in. Some of these names, being able to buy in the money and then sell upside. I'm going to look to do probably some of these, but I don't want to do it right now on a big day of stocks are moving up. Maybe when they retreat, because again, this is a breathing thing with these COVID names in China. It might present an opportunity to do these again, so that's something I'm going to eye up. Folks, it's 2023, man. Good to be back. Good to see you guys all back, and I'll see you guys again on Thursday. Thanks for watching, and as always, be smart, be patient, trade small, trade often. See you guys.